Is a market bloodbath in the works as new tariffs keep rolling in? We're also going to be talking gold, Bitcoin, silver, all that good stuff. Please welcome back to the show Gareth Soloway, Chief Market Strategist over at Verified Investment. Gareth, always good to see you. Welcome back to the Danny Show here on ITM Trading.
Oh, it's so good to be back. It's so good to talk to you. Thank you for having me.
Yeah, well, I missed you. I missed the charts. You don't have the chair today, but that's okay. Let's start with the S&P. Everyone's been warning me, telling me, is a bloodbath coming in the works? What are you seeing?
Yeah, so looking at the S&P, so there is downside most likely coming. And always remember, folks, I speak in a world of probabilities. So the charts give me probabilities. There's no certainties. But what we can see here is this amazing parallel where when you take the low from October 2023 and connect it to the low of April, that creates a trend line. And what we do here in technical analysis is we take that trend line like so, and we raise it up to the highest point here from 2024. And what do you see here on that amazing day last Thursday when the S&P got the Meta and Microsoft earnings? We gapped up.
Yeah.
We tagged that line basically to the penny on the S&P, and then we saw this reversal day. And when you get a reversal day where you open above the all-time highs and you close essentially below the recent lows, that's what we call a reversal candle. And that spells trouble. That tells you institutional money is essentially unloading into the retail kind of FOMO. And we got the follow through the next day. Sure, we're going to get bounces. I would like to draw your attention. One of the things you said, Daniela, is, are we ready for a bloodbath? Markets in general don't collapse on a dime. And what we can do is we can go back here. When we were making these all-time highs, you kind of were stalling out, but you had a lot of the psychology that was buy the dip. And we have that again over here. And so it explains why we fell 2 days. We got a bounce. Now we're starting to come down. And so the answer is, I do believe that we're going to eventually see another drop like we saw in March and April. But it takes a little time because we've programmed, and the Fed and the government has programmed everyone to buy dips. And so again, you'll see a dip, buyers come in, another dip, buyers come in, and then eventually people are going to get burned so many times buying the dip that's when we see the bigger fall.
Wow, that just pains me. I mean, look, I've had other people come on warning that we are going to see an April repeat. And it just makes me think, well, what does an investor do? Do you come out now? Do you wait it out? Do you tough it out?
Yeah. So the kicker is this, is that historically we are at some pretty crazy levels. And that does have me concerned where for me, and I can speak just as myself as an investor, I do have some long investments, but they're mostly in defensive names. Pfizer pays a 7.5% dividend, low end 52-week lows on the chart. I've been looking at these type of plays while I'm unloading into the big tech numbers. I mean, again, some of these tech valuations make the dot-com bubble actually look small. And so one of the things we want to do here is if we look at the S&P, and let's get rid of this, and this is really an amazing chart. Let's go to our logarithmic view. And remember, logarithmic puts it in perspective of percentages versus dollars. So it allows us to go back in history quite a bit more. And if we take a look here, we can go to the 1929 highs. We take the high just before the Great Depression. We connect it through this high of the dot-com bubble in 2000, and look at what this trend line tells us. We basically are right into that trend line right there again. And let me just adjust it slightly here. But essentially, we're at the high end of the band that marked the major collapse of the Great Depression and the dot-com collapse. And that to me is a warning sign saying that the valuations were now 2 standard deviations above the norm. You have to be more defensive here because we could be on the precipice of a major, let's say 30, 40, 50% decline in the stock market like we saw in the dot-com collapse.
All right, let's move on to the dollar now. We know this administration wants the lower dollar. Are they going to get it? What do the charts tell us?
Yeah, so the dollar is definitely in a downtrend. We can see a parallel channel right here, major low to major low. These highs here connecting right through. And essentially what this tells me is, yes, the dollar is ultimately going to go lower. And the reason I say that is because if we look at opposing charts like the Euro USD, and this is a big one, the Euro USD, which again gives us a sense of where things are, we can see here that we were in a long-term downtrend. I'm even going to go to my weekly chart so we can see it. This was from 2008. So from 2008, which we know was the beginning of the Great Recession, we have been in a downtrend of the euro
Yeah.
going lower
Yeah,
against
look
the
at
US
that.
dollar. But look what happened just over the last couple months. The euro broke out against the dollar. These charts, when they break out after being basically under pressure for 15, 16 years, you don't just see, oh, that's it. This is going to go higher, which means the euro against the dollar is going to go higher. Essentially, the euro is going to get weaker. The dollar is going to get weaker. So yes, the dollar over time will get weaker.
Well, that brings us to gold now. It was your top pick in 2024. Have I spoken to you this year, Gareth? I don't think so. Is it your top pick still for this year?
So it is not my top pick for this year, but over the next multiple years, yes. And essentially what we're seeing now is if you go back, it had a great run early in the year. So from 2025, the beginning, we had this monster move up. And then what we saw was a period of consolidation. And short term, we have broken a key line. On the gold chart, we can see again, it goes back to December of 2024. We are now retracing. In technical analysis, these two trend lines will be epic resistance. Now, down the line, I do expect us to break above that, but I think there's more digestion in the gold price. What I would say is start to look for a pullback on gold, potentially to $3,000 right
Uh,
in here. And then you start accumulating aggressively. I could see this being my top pick in 2026, but I think for the most part, it's going to stall out here in 2025 and continue to go sideways to lower for the next few months.
What's your top pick for this year then?
My top pick for this year is actually for at least the second half. Let's talk second half. I'm looking at China stocks. All right. China stocks, looking at their economies beginning to start to pick up a little bit. It does seem like the president is much more interested in making a deal. And this chart pattern is unbelievably bullish. You have a flat top here, which on the K Web, we're looking at the K Web, which is the Chinese internet ETF. We have an upsloping, so we're making higher lows, a flat top. This chart pattern usually creates breakouts, and I do think that the Chinese stocks will be the recipient of a trade deal eventually, and also an economy in China that starts to rebound. I also think the money that's been saturating U.S. equities will eventually rotate and look somewhat for outside the U.S. investments.
Let's continue down the list here because I know the silver watchers want to know what your take is on silver.
Yeah, silver's a cool chart here. So, mid to long term, I'm very bullish on silver. Shorter term, just like gold, it could face some headwinds. There's a trend line here that goes back to 2022. And look at how every time we hit this line, pull back, pull back, pull back, pull back. Everyone was so excited. It hit here, it tried it again, and it got rejected. So that tells me that, again, we're likely to see some more downside in silver to about 34.65. This is a key support line. You can see how it hit it here, pulled back, hit it there, pulled back, and then finally broke out. In technical analysis, when something pulls back to a previous breakout line, you buy into it and you likely get your next springboard effect. I'm a buyer at 34.65 and then
All
look for
right.
that $40 plus level.
Wow. Okay. Silverbug's going to be happy to hear that. Tying this back to the S&P, we know Bitcoin likes to follow that pattern. Will it also suffer the consequences? It's a rough day today as we're speaking.
Yes, and it's having a decent down day today, as you mentioned. And again, what we're looking at here is you had this topping tail. Now, in technical analysis, when you get a candle like this formation with a long tail at the top, that's a bearish reversal signal. We then saw consolidation, essentially a bear flag off of that. The breakdown told us it was coming. It did come. Support came in right at this previous pivot. But ultimately, if I'm right that the stock market does head lower, this is going to go lower as well. Next big support will be 108,000. And I do think we get there. And unfortunately, I actually think if the stock market declines even 20% from current levels, Bitcoin likely is much below 100,000, maybe even back to the 80s on that. So I do
Wow.
think we are headed lower on Bitcoin. I know the hype has been great, but it is still trading like a risk asset. Stock market's down today. Bitcoin's down. Yesterday, stock market was up. Bitcoin was up. So people just have to realize that it's still an immature asset. It's not gold. It's not the digital gold yet. It will eventually be that, but it just takes time. It takes time for people to adopt it for that.
I didn't ask you to prepare these charts, but this question came to me. On the stablecoin front, who do you think wins, who loses?
Oh, that's a good question. I mean, Tether is the king right now. There's no doubt about it. I think, again, Tether probably continues to be the leader of the pack. But again, it's not to say that other stable coins can't be big players, USDC. In general, I would choose best of breed. I know there's a lot of stable coins out there that are coming into play. But again, keep in mind that not all of them can survive, in my opinion. So again, stick with best of breed.
All right, just bring it home for us now, Gareth. I mean, overall, what do you want investors watching at home to know what to look out for here in this economy?
Yeah, so I think the key is that we saw obviously the tariffs being re-input. That again was something that the market expected. What the market didn't expect was the jobs data. The jobs data and the PCE being slightly hotter, which is the inflation data. When you have hotter inflation and a weakening economy, that is a recipe for stagflation. And remember, a weakening economy means that corporate profits may suffer. So the AI buzz has been taking us home right now.
Yeah.
But again, that is getting of like a very overcrowded trade, very reversal prone. Be very careful here, guys. This chart I showed you on the S&P is a chart that we could have a major fall off of.
Wow. All right. Gareth Soloway, thank you for taking a break. I know you're on vacation, but you joined us for this special segment. I appreciate you. Appreciate your time.
Oh, thank you so much, Danielle. It's wonderful to talk to you, and I hope to talk to you soon again.
Yeah. Absolutely. And thank you all for watching. More great content coming your way. Be sure to stay tuned to the Daniela Cambone Show. Subscribe to our channel here on ITM Trading. And of course, reach out to my colleagues if you're thinking about and ready to start your precious metals journey. It's a free strategy session. Tell them I sent you. They'll take extra great care of you. You can do so in the Calendly link below in the description. That's it for me. We'll see you soon.